Hi everyone, my name is Tanya and I'm with Golden Apple Agency, and today we are focusing on finance intelligence, specifically the LLC and the IRS. What is an LLC? So based on the IRS interpretation, a limited liability company, an LLC, is a business structure allowed by state statute. Each state may use different regulations, and you should check your state if you are interested in starting an LLC. Owners of an LLC are called members. Most states do not restrict ownership, so members may include individuals, corporations, other LLCs, and even foreign entities. There is no maximum number of members. Most states almost permit a single member LLC, those having only one member. So a single member LLC is someone who is basically a sole proprietor that wants that a limited liability between him and the business or her and the business. A few types of businesses generally cannot be an LLC, such as banks and insurance companies. Of course, always check your state's requirements and the federal tax regulations for further information. And there are special rules for foreign LLCs. As you can see, all the IRS talks about is the state level. So the LLC is formed and regulated at the state level. Now, each state has its own rules, and you definitely need to look into that and check your state rules. While there is legal benefits to form the LLC and protect your personal finances and assets, that's more of a lawyer question and a lawyer consultation. Today, we're going to focus specifically on the tax aspects of the LLC. So what is LLC tax classifications? So in reality, there is no separate LLC tax form. With the IRS, the LLC still needs to make an election on how they would like to be taxed. The three basic companies formations or tax classification is sole proprietorship, partnership, and a corporation, either S or C. For income tax purposes, an LLC with only one member is treated as a disregarded entity from its owner. However, when it comes to filing your taxes, you will file it with your personal tax return on a Schedule C. Domestic LLC with at least two members is classified as a partnership for federal income tax purposes. This means that a separate return has to be filed as the partnership return, and then the income is claimed on each partner's personal return. In order for an LLC to be considered a corporation, an entity classification election must be filed with the IRS. There are benefits in selecting an S corporation tax filing. However, it's really not for everyone. Choosing the best tax classification for you. LLC taxes directly affect the owner. Therefore, you can't just look at the LLC. You have to look at the whole tax picture. Things like, is the owner married? Do they have kids? Do they have another job? Lots of things come into play when choosing the best classification for the LLC specifically for you, the owner. Taxes are on a very personal level. In fact, most people will tell other people or strangers what they're sick with before they'll tell how much money they made or what their tax issues are. That's why it's not a one-size-fits-all. You really have to plan your taxes. Tax preparation software and even most professional tax preparers do the fine job putting the right numbers in the right boxes on the right forms. But usually that's all they do. Let me be clear with you guys. Tax preparation is not the same as tax planning. Also, tax preparation is not the same as bookkeeping. So bookkeeping is where you calculate your income and expenses throughout the whole year. Tax preparation is just recording your data on the IRS forms correctly. Now, don't get me wrong. It is extremely important to report your data correctly to the IRS. One missed box, one missed line, and you might have issues with your tax return. I've seen it happen. But more importantly to understand is tax preparation is not tax planning. But when you own your own business, you need to really work with a tax professional. I highly recommend this. Do-it-yourself program like TurboTax, although it's great and amazing, they're great. That's a great program for people who have simple income taxes like from a job or retirement and possibly like an interest form from their savings account. Pop-up seasonal tax returns, places like H&R Block, although they are more looking to be there year-round for you, but in general, they only focus on tax returns, usually have a goal in mind on getting the most taxes done in the least amount of time. Most likely, that particular tax preparer will never see you again. Again, this is great if you just have a W-2 and want someone else to prepare the form, or if you just don't want the headache of trying to figure out the program. But that's only tax preparation. That's like driving a car using just your rear view mirror. Can you imagine not being able to see what's in front of you? You're just focusing what's in the back in this little mirror. If you really want to pay less taxes, which most business owners do, you can't settle for just recording last year's history. And that's what it is. Tax preparation is recording last year's history. It can't be changed. Especially when it comes to LLC, you cannot change the LLC tax classifications after the year has ended while you're preparing your tax return. So you actually need someone who can help you write your history, write your taxes, write the accounting with a complete menu of really important proactive concepts and strategies that ordinary tax preparers usually overlook because they're so focused on just preparing your taxes. Tax preparation and tax planning is not the same thing. And very few tax preparers even focus or honestly understand tax planning. So let's talk about the LLC finances for a little bit. It is extremely important to keep your business and your personal finances separate. I cannot stress this point across enough. If you're mixing your business and personal finances, you're possibly removing that limited liability between the two. The best thing to do is have owner's draw or shareholders distributions as taking money from the company when you need to spend it on your personal expenses. Now let's talk about LLC expenses. It's really important to understand that an expense has to have four things. It has to be ordinary, like other businesses like yours have it too. It has to be necessary, like you need this to operate the business. For example, I need a professional tax program in order for me to prepare taxes. The expense has to be reasonable. And most importantly, it has to have a business purpose. So for the expense to actually be tax deductible, it needs to have the following: date of expense to make sure you're claiming it in the right year, how much, how paid, bank account, credit card, avoid cash, and proof of payment, basically your receipt. And the most important one is what was the business purpose of it? If you have any questions, I do offer free consultations. You can book your consultation online with me, or email me, or even call the office and book it with my assistant. I also wanted to let you guys know that there is a book available on Amazon and on my website on the 10 most expensive tax mistakes. I highly recommend every single business owner reading it. It goes into depth in understanding your tax finances much better. Thanks for watching.